So if you want to really survive in a relationship, think about how you're going to tackle the tough times. If you have a clear answer to that, you can thrive.
Much better off.
Exactly. If you're going into a business deal, don't only think about how it's going to work. In fact, you're better off planned thinking about if it doesn't work. And unfortunately, the way our minds are programmed, the way we've been brought up, if you tell someone something of the sort, they may think you're pessimistic, but I think you're more realistic. Like you're optimistic, but with some sense of realism. Like, things don't always go the way you expect. And when things don't go the way you expect, how are you positioned?
What's the contingency plan?
Exactly. If you have that, you've managed risk. If you don't have it, it's like Buffett said, when the tide goes out, you'll know who's been swimming naked. Exactly. So you'll be swimming naked. So I think that's how I think about risk. But coming back now down to markets, I think the most important thing we're going to focus now on is money management and exposure controls. So when you start out in trading, there's the idea that, like I was looking at my recent trading plans, the ones I had that when I started trading in 2017, 2018, is I've been evolving. And in 2017, I believed that 10% drawdown was fine. It was okay. It's something that you can
That
easily.
time you're taking what
And what
risk
do you think
per
was
trade?
the reason for that?
Naivety. I would say it's
What risk
naivety.
per trade are you taking back?
About 2%, 2.5%. Get?
So it's done with so.
Yeah, 3 to 5.
3 to 5. You're taking only 2 trades you're ready at.
Per
Trade. You wrote on your plan.
per
We don't know
trade.
looking at.
So if you think about such risks, that's very, very high risk. Your account will be very, very volatile if you're trading in that form. And I had to go through that volatility to realize, because I had very big wins and at the same time I had very big losses.
True.
You get?
Like I was showing you guys, there's a month I made about 400% return
And then the following month
out of
business. Exactly.
Like
400% in 1 month.
That
Yeah.
shows you how this boy doesn't know how to position size in the market.
Exactly. You're so volatile. You're everywhere, and you can't survive if your account is that volatile.
Bet.
Yeah. Pardon?
I said bet. True.
Yeah. So it's very, very important for you to think about how you're going to position size in the market. You get?
Yes.
So if you're going to position size well in the markets, then how are you going to position size? And that is very, very dependent on your hit rate.
And even before I think we go into that, I think I'll also ask you another question. Because I stated it, like, before you position size, what are you position sizing for?
What's your objective?
What is your objective?
Exactly. That's another point. That's why you actually start.
Exactly.
What's your objective? Is your objective to make 5% in a month? Is your objective to make 10% in a month? Is your objective to double your money?
Is your objective to not lose
5%
in a month?
Exactly. 10%. So how do you position size?
So you have to have those objectives clear.
Exactly.
So you start by
That's the first thing by then you need to have. Like I want to avoid going down to
into
maybe a drawdown of more than 5%. Okay. How do I position size to ensure that doesn't happen? Where do I start? Because you can start off small, and then as you go up the ladder, you can keep on adding risk. And I think that's one of the things that I've learned. Like in trading, people do it in the wrong way. They tend to add more risk when they're doing poorly. And
to make it back.
Exactly. And take less risk when they're doing well to try and protect themselves from losing. The reverse is the case. You should take more risk when you're doing well and reduce risk when you're doing poorly.
Yeah.
And all position sizing methods that work in the market are designed to do that effectively.
Yeah.
If your style of trading does not allow you to make more when you're winning and lose less when you're losing, then I don't think you can maximize returns like most people will. Because that's the value of risk reward. That's the value of scaling in. Like you don't scale in into a loser, you scale into a winner. You don't I said what first?
Risk reward.
Yeah, risk reward, exactly. You don't lose $5 in the pursuit of one. You always lose $1 in the pursuit of 5.
Yeah.
So all systems, all methods that are used in the market are designed to help you maximize on return and minimize on losses. And if your system doesn't have those two things well intertwined together, then you'll end up making emotional decisions. And that's how most people trade. They take intuitive risks. So hii trade naona hii acha niweke 3.
Exactly.
Hii trade iko sawa, hii iko sawa, hii acha niweke 3. Or this trade let me position size at 4% or at 5%. That is the worst method that you can use. You need to have a position sizing strategy, just like you have a strategy for trading. So how are you going to manage your equity and how are you going to manage your
Balance.
sizes exactly in the market, such that if you're up, how are you going to maximize and keep on making more money? If you're down, how are you going to minimize on losing? And these things also come with experience. So if you're starting out and your main task is understanding, first of all, how to break down the charts, then these things don't even add up to you.
Yeah, true,
Don't
true,
make
true.
sense.
They don't make
It's a
sense.
journey, yani.
Exactly. But the minute you start managing 1 million shillings, 10 million shillings, 100 million shillings,
Makes sense.
then
Yeah,
you really
by
need to
force.
understand, okay, if I lose 10%, I've lost 10 million. If I lose, how are you going to avoid such things and ensure you make more and lose less? I think that's where I'd start.
That's a good point. So making more and losing less.
Yeah.
You've read this book by Ray Dalio, Principles.
Yeah.
And there's a part he talks deeply about diversification, and he thinks that is the holy grail to a successful investing.
Yeah.
What do you believe about diversification?
I believe, first of all, I think that's one mistake that many traders make, and I still also haven't figured out a very good way of dealing with it. It's exposure and diversification, just like you're saying. When you're choosing a set of markets to trade, it's very, very important to try and choose markets which are not highly correlated. Because if you choose markets that are highly correlated, then your returns will move up and down depending on how those markets are performing.
And they're likely to be in sync.
Exactly. But if you choose a portfolio, or if you decide to trade markets which are not highly correlated, and correlations, it's not in only positive and negative ways, because people don't understand correlation. Like there's positive correlation and negative correlation.
Yeah.
There's still a correlation.
Yeah.
I want things which don't move in the same way or in tandem. And it's a hard thing to attain because most markets nowadays are correlated. If the US markets start falling today, there's a very, very high chance Chinese markets will follow, Hong Kong markets will follow, UK markets will follow, Europe. Everything will go into the red.
Yeah.
So it's not
interconnected.
Exactly. It's not a very, very easy thing to attain. And one of the ways you can also do this is for me, what I've done is I've chosen a set of 5 markets, but I have exposure controls. So I can't take more risk in some markets which are highly correlated. For example, if I have a gold position, I'll have a gold and maybe a currency position. But if I have a gold position, it's very, very hard for me to also take a position maybe in silver. If I have an oil position, it's very, very hard for me to take a position maybe in the Dow. So I want to take positions which are not highly correlated. And correlations also work sometime and they fail sometime. For example, there's a time whereby gold really moves in tandem with the dollar. But there are times where they're disconnected, when both of them will move in the same direction or in different directions. So you really need to track markets to understand, okay, these correlations are working, this time they're not working. And how do you trade the markets from that perspective? So that's how I've diversified.
And still on the same point, he continues to say that is the only way you can reduce risk without reducing return.
Yeah.
So I think that's a very powerful point. Like, how do you reduce risk without reducing return?
Yeah.
So also it comes down to position sizing, and the ways of position sizing also.
Yeah.
As you were saying, when you are down, you cut down on your position size.
Yeah.
When you're up, you
Increase.
maximize.
Yeah.
And there's that thing you think. I don't know if it's you who came up with it. The money market, money.
Markets money method.
Yeah, markets money method. So you now start maximizing on your wins.
Yeah.
So also Avantap talks about it strongly.
Yeah.
In that, let's say you had $100,000, then after 3 months you have $120,000.
Yeah.
So you can continue risking 1% of the principal and about 5% of the profit.
Yeah.
So with that, you are increasing your
Risk.
return.
Yeah.
Because you're winning. So you're increasing your return if you continue winning. Yeah. But the downside is still capped.
Yeah.
See? So if traders can still like try and put that into their trading system, like how do you ensure you always reduce your risk without reducing your return?
That's the main question.
Yeah, so
and that should be objective as a trader.
Exactly. That is the only way. Now you okay, as you always say, there's becoming good at trading and there's becoming spectacular in this game. So
great at it.
Great at the game. So if you want now to get to that level, you have to now start finding some ways of tweaking your system now to maximize on your wins so greatly in that it covers for almost all the risks in your system, because we all know like there's so much risks in your system.
Yeah.
So like your reward needs to cover for almost all that 20 risks.
Yeah.
So if you still can't reduce those risks without reducing that return, itakuwa so hard for you to be consistently winning big in markets.
Yeah.
And I think moving forward, I think now, okay, not right now, because now that's not my main objective, but in 2, 3, 4 years now, that will start being my main objective. How do I start maximizing now on my wins bigly? You see, so basically, I think also positioning, as you've said, it's a journey.
Yeah.
Ukianza mahali hata ujua it doesn't matter to you first.
You don't even care.
Yeah, you don't care.
You're not aware of it.
I can assure you that 90% of the traders won't even listen to this podcast. But if you did a podcast telling people where the markets are going this quarter, everyone will want to listen.
Exactly.
You
Signals.
Yeah.
Tips.
So people don't really understand what is important for you to succeed as a trader.